Under Pillar 1 of the AEC blueprint, we have free flows of goods, services, investment, and skilled labor. And then we have freer flows of capital. Take note of the word freer, not free, which really means not unfettered flows. This reflects the fact that there are significant risks to unfettered flows of capital, despite the significant potential benefits from them. There are three major components of the AEC blueprint in support of freer flows of capital. One, orderly and prudent capital account liberalization. Second, strengthening ASEAN capital market development and integration. And third, which are really under RAFA's, financial services liberalization. ASEAN needs deep capital market because much of the region needs to improve infrastructure. And that, of course, through PPP perhaps, those need huge and longer-term capital, by the way. And also, export-oriented and forward-looking SMEs in the region, which the region needs to upgrade itself and become competitive, would be best served by efficient and liquid debt markets. So, ASEAN's drive for connectivity under your master plan for ASEAN connectivity, as well as financial inclusion with that Bali framework, need a much more developed and integrated capital market in the region. In the light of the ongoing Euro crisis and East Asia financial crisis of 1997 and 1999, which means that those shows you the significant risk on these one, the question really is, what should be the way forward for ASEAN on financial integration capital market? Of interest to me, possibly to you, I hope, and possibly to DSG Lin, can there be success stories on capital market development and financial integration by 2015 in support of a really credible AEC 2015, and possibly, like what David said earlier, closer to that tipping point for the whole region. We do have an excellent speaker. The best person who can discuss this is really Mr. Lee. And of course, an excellent set of panelists from Standard Poor, from Standard Chartered Bank, as well as from AMRO. I'll start with Mr. Lee. Mr. Lee Chuan Tek, who is the Assistant Managing Director of the Monetary Authority of Singapore, but he's also the Chairman of the ASEAN Capital Markets Forum, and he will present a provocative presentation. Can ASEAN able to weather through internal and external shocks?
The world that we are currently in is really a very uncertain and a very perilous one. In Europe, the debt crisis continues. We are now in a short reprieve because of the ECB's open market transactions, but OMT. But we are definitely not out of the woods yet. The OMT only applies if member countries receive some form of an aid package, and we know that neither Spain nor Italy are keen to apply for one. So that leaves plenty of question marks about the effectiveness of OMT. But there's a deeper question for the whole of Europe, which is, can they really break out of that austerity, economic recession cycle that they are currently trapped in, which is greater austerity, causing economic slowdown, causing worsening budget deficits, requiring greater austerity again. Can they really break out of that? In the US, we have rapidly decelerating growth. And here we have to believe that QE3 will be more effective compared to QE1, QE2, or all the other measures that the Fed have taken so far. And there are question marks about that. But the greater worry for me personally about the US is the state of the federal government. It's likely that ahead of the presidential election, the federal government's policies will be hamstrung. It is possible that even after the election, that the government actions on the fiscal front will continue to be strained. And this leads us to the much talked about fiscal cliff, which is in effect come 1st January 2013, a sudden contraction of $100 billion in federal spending, a sudden end to the Bush era tax cut, a sudden end to the Obama 2% payroll tax cut, all on 1st January 2013, which some economists have estimated can lead to a contraction of as much as 5% of US GDP. The financial channel is equally important because ASEAN is very much linked financially to the rest of the world, both in terms of capital flows as well as bank flows. Should there be another huge financial shock in the developed world or in China, we are likely to see sharp capital reversals, similar to what we have seen in 2008. And that can actually shake ASEAN economies quite a bit. And as we have seen back during the Asian crisis, external shocks can quickly surface internal weaknesses within ASEAN. And that in itself can lead us into a downward spiral. Now, so the world is a perilous one. The question we have is whether integration can help cushion us from some of these storms. I think integration can. In fact, within the ASEAN blueprint, within the ACMF, we have been doing quite a bit to try and integrate ASEAN capital markets. Where capital markets integration is concerned, the European Union, I guess, is considered the gold standard. Where we are today relative to that, I think, is a long way off. Okay, it's not realistic to assume that we'll get there very quickly. We will not get there by 2015. But as the Chinese saying goes, even a journey of 1,000 miles starts with the first step. And we have taken many small steps, as listed there, towards that goal. Now, many of those things I've touched upon before, and I think many of you are aware of them. But in the interest of time, I'll just touch on the very last one, which is something that I think can be potentially a big game changer, which is to have a mutual recognition regime. Now, if we can attain that, and that is a big if, okay? Essentially what it means is that if there is a security, a stock or bond, or fund that is approved in one ASEAN country, it's automatically approved for offering in the other ASEAN countries. That is the ideal goal. Are we likely to get there by 2015? Probably not. But I think in certain asset classes, particularly in funds, we'll get quite close to it in practice, if not the full-fledged in legal form of mutual recognition. A single ASEAN currency is really a very, very long way away. It's not something that we should try to do. I think personally, it's not something that will lead to any form of financial stability within ASEAN. In fact, it could be quite the opposite. But on the other hand, it also shows that because we are so different, that if we can bring our markets together, we can actually complement each other and create more diversification within our markets. The third way in which it can help is that as our markets become more integrated, as our economies become more integrated, we will likely evolve safety nets, mutual support safety nets that can help each other in the event of crisis. The Chiang Mai initiative, I think, is a good example of that. In May this year, we raised the amount of the safety net to $240 billion, which is quite sizable. It will help individual ASEAN countries should they encounter big capital withdrawals. Another example of efforts where we can come together and help each other is actually in AMRO. The AMRO office was set up under ASEAN Plus 3. And really, what it means is that we pool our resources together to try and help us do better surveillance, to better understand financial and economic developments within the region. So integration helps, but is it enough? And as I said before, I don't think it is. And a clear example where integration alone does not ensure financial stability, I think, is in Europe. What you see in Eurozone right now is fairly integrated markets, but absolute chaos. I think at the bottom line, even when we try and bring together the markets together, we should ensure that the fundamentals within each country, within each market, are strong. And to that extent, we can think of three types of fundamental strength: fiscal strength, current external balance strength, and financial market strength. As the ACMF chair, I can say that this is something that the ACMF is very aware of. And even as we try to bring our markets together, we try to harmonize our standards. We want to not just harmonize the standards, but actually harmonize it at a higher level. Because it's important for us that we do not seek to harmonize at just the lowest common denominator, but go for the highest one. So that eventually, even as we bring our markets together, we can also strengthen our domestic fundamentals. And in that way, we believe that the whole of ASEAN can benefit, and then we can therefore be assured of greater financial stability. I'll stop here. Thank you.
First, let me share with you that Standard & Poor's assessment of the three economic risks that face the world today with respect to the Eurozone, the evolving situation in the Eurozone, the fiscal situation in the US, and the declining growth in China are fairly similar to what our speaker, Mr. Lee, has outlined. S&P's global chief economist was in Singapore a couple of weeks back, and he elaborated these, and our assessment was fairly similar. The one thing that we all asked him, and this is at a luncheon for investors in Singapore about 2 weeks back, was when would QE3 be rolled out? And he said that it was more likely September than October. And he talked of why he didn't think October was appropriate, because it would probably be seen as being political. So we see that at least one of his predictions for QE3 came right. Now, as we all know that equity markets are the first to experience both sharp inflows and outflows. And with QE3, there is a risk that we will see sharp inflows into the region and the effects of that. But we also know that outflows can take place quite quickly, and we saw what kind of a destabilizing effect those can have as the deleveraging in Europe began a few years back, and the impact on our region. So strengthening the region's equity markets and linking them to each other is a priority, and we can see work being done on that. And as you all know, yesterday the Malaysian exchange, the Thai stock exchange, and the Singapore stock exchange, they announced that the trading links had become operational. Now, it's all right for these links to be established, but one shouldn't really stop at that, because a lot more work has to be done. As Mr. Lee has said, you need harmonization of practices, policies, regulations, disclosures, and so on. But there are a couple of other things that also are required. Research presently is available just on the top 20 or 30 stocks in each market, and when you're looking to make stocks available across the region, you need to have more widespread research available that's understood and is accessible to investors. The second thing is you need the whole ecosystem developing, and while the mutual recognition system may apply to intermediaries as well as it gets rolled out, what you need is a whole ecosystem of market makers, intermediaries who help investors from thought to settlement. Standard & Poor's has been working with the US ASEAN Business Council, with ASEAN's policymakers for about 10 years. And when we've tried to understand the challenges that ASEAN's policymakers have been facing, they framed them into three areas. And this is insofar as capital markets are concerned, financial markets. The first one was, with all this attention to China, India, how does ASEAN get its traction of capital and investment? You can see from Mr. Lee's slides and the other slides presented earlier today that while ASEAN's countries individually are small, collectively they become quite a meaningful class. ASEAN would become the second largest stock market in Asia, would be the third largest bond market in the region, and so on. So that's the first challenge. How does ASEAN compete? And ASEAN has done relatively well more recently. You saw that in the slides in the previous presentation where you saw that the gap between ASEAN and China had narrowed significantly. But I'm talking of a challenge that was being talked about in 2007, 2008, when ASEAN looked a little bit lost relative to those two economic giants. The second challenge is, ASEAN's savings are huge, but are invested largely outside ASEAN. So how can one bring back those savings so that they can be invested for infrastructure in the region? Now, the savings do come back via fund managers in the Western world, but they come back at a much higher cost. The third challenge was, while you look at equities and bonds, and I would say bonds would be more government bonds rather than corporate bonds across ASEAN, you will find that roughly 30% of the holdings, largely in stocks, across the ASEAN's exchanges is held by foreign investors. If you look at how much is intra-ASEAN investment, it's about 3%. So the question that you ask yourself is, what is it that the outside world sees in ASEAN that we don't see in each other? And so what happened is that it has led to a number of initiatives being talked about by policymakers and private sector players like ourselves. And when I conclude, I will talk a little bit about those initiatives here. But what I wanted to say was that as people in the public sector and in the private sector collaborate and work on various things, and various initiatives, they need to reflect on how do those initiatives respond to those three challenges that I outlined. Now on the equities, a lot of work has already taken place, and Mr. Lee has talked about the initiatives on the trading link. I talked about what additional work needs to be done as well there. But one must not forget the bond market either. In recent months, issuance in G3 currencies, which is the US dollar, the euro, and yen, they have peaked. They say that across Asia, more than $100 billion has been raised so far this year in the corporate bond market, which is an all-time record. And if you look at issuance in the last 2 weeks, you see issuers who you'd never heard of coming to the market as if it's money for free. Now this market exuberance can be problematic, particularly if there is a distortion in risk-reward relationships. And what needs to be done is for various participants in the marketplace to bring back more rigor in that so that we don't have some of the same problems that we had of 1997 when unknown names came to the bond market and they led it to collapse. That's the G3 markets. Now, in the local currency bond markets, the policymakers' initiatives have been working very well insofar as individual countries. So if you look at Malaysia, it's the fourth largest bond market, the local currency bond market in Asia Pacific. If you look at Thailand, it's not far behind. And Singapore is having a record year. Now clearly all of the initiatives that policymakers have done to ensure that issuers in the region have access to finance in a currency that suits them is paying off. The other thing that's critical to note over here is that investors can be skittish, and we saw what happened, well, just the first half of last year when the skittishness led to virtually a shutdown of the credit markets in these euro currencies. However, ASEAN's local currency bond markets continued to function, and that's really a tribute to what policymakers and the private sector have done collectively to make them function. What our suggestion as an organization is that looking at what has been achieved, ASEAN's policymakers should not get complacent and take their foot off the pedal. I think we need to continue with the same level of reform because the local currency bond markets are very key to financial stability. Now, what needs to be done? I think what's happened is that while each of these markets, certainly for the top 3 ASEAN countries, have done very well, the other 3 markets, Indonesia, Philippines, Vietnam, which are the next 3 in the top ASEAN 6, they need to work and get their bond markets going. You also need to link and connect these bond markets so that issuers and investors are able to tap money within the region and not just from their own domestic markets. Now, given that this is a conference that is a symposium that is talking about how the private sector is working with policymakers, I thought I'd share with you what are our priorities as an organization for ASEAN. First, what we are doing is that we have made investments in rating agencies in Malaysia, in Thailand, and we have a partnership in Indonesia. It is our intent to deepen all of those relationships, to share our methodology, our know-how, to connect these organizations with local, regional, and global investors so that they can be the voice for their markets to global and regional investors. The second thing is, in response to those 3 challenges that I had talked about earlier, 3 years back we had launched an ASEAN rating scale. What that was aimed at was providing comparability for issuers across ASEAN so that it would contribute to the development of an ASEAN fixed income asset class. We've made some progress. We're grateful that policymakers, particularly in Malaysia and Thailand, have over the last 12 months reflected that in changes that they have made to their rules so that we are able to access those markets and provide investors with benchmarks that are both global, local, and sorry, I should say both, it should be 3. It's global, local, and regional benchmarks.
From a commercial perspective, an integrated financial market in the ASEAN and through the AEC route, in our view, would be extremely beneficial to both promoting growth, though I guess it's very difficult to put a number to say what impact it would have on GDPs, but it would have a positive impact on growth. And vice versa, we believe superior, integrated, unified market would benefit the financial sector by providing both greater depth and opportunity for the financial sector to grow. So the case for the AEC from a financial sector perspective, from a commercial perspective, doesn't need to be emphasized again or stated again. And I think in lots of ways, the discussions throughout the day through the other panels have also echoed the fact that AEC is likely to be beneficial. At Standard Chartered, as you probably know, we are largely an Asian, Middle East African bank with a long history in this part of the world, much before, of course, ASEAN came into being in a formal manner. And we do operate in all the ASEAN countries, barring Myanmar at this point of time, but probably the only commercial bank to our knowledge which does so. This is not an advertisement on Standard Chartered, but just to emphasize the point that for us, the success of the AEC and the success of this forum of ASEAN as a community is quite important to our own growth and plans.
I guess to start the dialogue and open the forum, it might be useful if you could ask Mr. Lee, many of the suggestions here are really regulatory reforms to help unlock the savings, the youth savings to be directly invested here rather than indirectly via mutual funds and others in the West, and these things related to greater SME access to finance. Most of these are in the area where you are chairing. What are the possibilities that these could be there by 2015? Can this be some significant story that we can provide to the ASEAN people by 2015?
I think it's a more complex answer than yes or no. Let me explain it this way. If you look at ASEAN 10, when it comes to capital markets integration, the first thing you need to do is to divide ASEAN 10 into ASEAN 5 and the other 5. ASEAN 5 meaning Indonesia, Thailand, Malaysia, Singapore, Philippines, and then the other 5. The reason is that the state of capital markets developments between these two groups of countries is actually quite different. So our focus, at least for the second group of countries, which is Brunei and the CMLP countries, is really to help them, to give them technical assistance, to help them raise their level of capital market development to the same standard as the first 5 before we talk about integrating them. Now, within the first 5, okay, what can we do? Well, there are 3 things, 3 broad areas that we can think about. The first area is in the area of investment funds, collective investment schemes. This is the area I think we can possibly make most progress on ahead of 2015. And what we aim to do is to have a situation where across at least these 5 countries, where we get very, very close to an automatic mutual recognition scheme. It's still not a mutual recognition scheme in its full-fledged form, in the sense that if a fund is approved in Singapore, it automatically can be sold in Malaysia. It's not that. It's not possible because the laws in many of these countries require some form of approval. So it's not automatic recognition in form, but it's very, very close to an automatic recognition in substance. What we have done so far is that we have done a regulatory mapping, the kind of requirements of each country. We mapped them all for these 5 countries, and we found that actually the degree of overlap is very, very high. And since it's very high, what it means that if you get a fund approved in Singapore, the fund the authorities in Malaysia is willing to then agree to accept this fund, and then they just look out for the remaining areas that do not overlap, which is very small. It does mean that for a fund manager, he still has to submit 2 sets of applications, but the applications will be very similar, almost identical. And it is the certainty of it being approved in the second jurisdiction after it's been approved in the first jurisdiction is very high. I think that goes a long way. The second area is in primary offerings of securities, debt as well as equity. Here, we are also looking towards some kind of expedited recognition regime. I think in this aspect, Singapore, Thailand, Malaysia have made quite a bit of progress in arriving at what we call the ASEAN standards. ASEAN standards is a way where we harmonize all our disclosure requirements to the same standards.
So that's the first thing I wanted to talk about SMEs. The second thing, we talked about creation of an ASEAN asset class, and we talked about equities, and we talked about bonds. The third missing piece is, having index products. And there is an ASEAN index out there, but I think my information may be dated, but I think it's not got much more than $100 million. And I think this is an area where the banks and distributors and the service providers can come together to start providing a service in the run-up to 2015 and see how savings can be tapped.
Thank you very much, Mr. Katpala. Actually, this SME rating system I thought is really fascinating, because this is one of the bottlenecks for having the forward-looking SMEs have access. If there is a lot more of that in the region, the better.
As we see ASEAN become more integrated, the financial sector we therefore see a more streamlined process of the regulatory system and a more consistent policy architecture, therefore we'll see guys like banks will grow. Is there this ask of your personal view, is there a concern that there would be then the creation of systematically important financial institutions? Is there a fear that they'll become banks that are, for example, too big to fail? Thank you.
As a regulator, the concern is always there, with or without integration. I think, my personal philosophy, I think there are two parts to try and to tackle this sort of too big to fail issue. The first part, of course, is to make sure that there is sufficient prudential measures to make sure that most of the banks, if not all the banks, are very well run. And I think following what we have seen in the crisis, we can expect more and more of such measures to take place. And the measures need not be just capital standards alone, although I know a lot of focus has been placed on those. But it's also measures in terms of how you can shape the behavior of the banks through rewards for good behavior to stake for not so good behavior. I think ultimately we need to build within the banks themselves a culture where they can see that it's in their own interest to ensure that you do not take excessive risk and risk imploding themselves and exploding the system. The second way, where the onus falls back on us, and not just the regulators, but the authorities as a whole, is not to create moral hazards. If you look back at what happened in the 09 period, 08, 09 period, one of the things that I personally felt that, on hindsight, we may have given second thoughts to doing is the whole idea of giving out deposit guarantees. You realize that at the height of the crisis, a number of countries started giving banks or blanket guarantees to entire financial systems. It started with one country, and then before long, every country, including Singapore, have some form or another. If no bank has done it, if no country has done it, likely no country will move. But if one country starts moving, there's a risk that if we don't do it, then our deposits will start flowing to other countries.
Keep it as your lowest priority, better wait 50 years than 25 years. The advantage of today's sad story of the euro and the Greek drama, etc., is that nobody asks me the question anymore. I think it's really very useful to first integrate, and Europe is the demonstration that the Netherlands and Germany were already de facto a monetary union for 20 years. But if you let countries in that are perhaps not yet fully integrated, well, I don't have to tell you, you didn't ask me, but I couldn't resist. Thank you.
Yes, please. Last.
Sorry, I actually don't have the financial background of knowledge, but I just would like to ask, in comparison to the bilateral swap arrangement with one of the individual ASEAN countries to the countries outside ASEAN, for example, with China or with Japan or with Korea. So what's the impact of that bilateral swap arrangement between individual member states with external partner vis-a-vis the integration in ASEAN Economic Community?
There are many bilateral swaps after the Lehman crisis, but many are just a temporary rescue package, which have some risks of inviting this moral hazard problem. You have to be very careful.
I'd like to thank you for your leadership. The things that you said about the possible success stories related to investment funds, primary offerings, and secondary market trading that's a significant success story by 2015, if you can have it. I would love to have more of the SME ratings system that's much more developed within the region through the expertise of foreigners like you, foreign firms like you. That would be wonderful for the SME firms in the region. I think those are the two kind of budding success stories that I gathered from this discussion. And that by itself, hopefully, is something that you can sell to the general public. So, Mr. Lee, thank you very much. Thank you to all of your members for doing this good service. Of course, I'd like to thank the panelists for all their insights. And indeed, this got to be done much more often. And I'd like to thank everybody also, and please give them a very big hand.
Thank you very much, Dr. Conchiano. We would now like to request His Excellency Dr. Lim Hong Hin to present a token of appreciation to the moderators, speakers, and panelists.
Good evening. If I may